brought to you by Borealis Mining.
Hello, welcome back. After a long week in the States for the Precious Metals Summit, we wanted to do a big debrief with Alasdair Macleod, the author of the Substack, MacleodFinance.com. Alasdair, good to be with you.
Thank you for having me, Peter.
No, more than welcome. Look, I think last week was interesting, but there was a lot of things being spoken about, and it was quite hard to, I guess, hone in on what's important. I mean, some of the topics that we were talking about last week were obviously the conflicts going on around the world. We have an open war with the White House and the Fed. We've got reallocation of capital from bonds into other assets. There's rising budget deficits. We've got a rise in East, a polarized West, and also economic crisis in most of the West as well. I mean, there's a lot going on. What for you is, I guess, is all of this important, or are you focusing in on one or two things?
Well, I think you make the point yourself. You know, there's so many things going on that you've got to focus in on something. I think the thing that's common to it, there are two things actually which are common to it. The first is, if you like, debt traps being sprung in all the major G7 currencies. And the one that will actually undo everything, I think, is the debt trap for the dollar. We can see, I mean, foreigners are staring down the barrel of a really nasty outlook for the dollar. And, you know, you've got the politicization of the Fed, not that it was ever sort of, if you like, free from political influence, but, you know, I mean, you've got you've got President Trump basically pushing the Fed into cutting rates. He wants a lower dollar as well, et cetera, et cetera. Now, it just amazes me that foreigners sitting on roughly $40 trillion and underlying financial assets haven't really moved yet. I mean, they're just sitting there, you know, rather like rabbits in the headlights of an oncoming car. That's going to change, I think. And what we're looking at, therefore, is a collapse of the debt cum credit bubble. That's what's really going to dominate events, I think, particularly in the last few months of this year and into the first quarter of next year. I really do see a massive debt bubble implosion developing. And I mean, you can draw parallels of 1929. I mean, we got a combination of roaring 20s, followed by, guess what, a collapse in the credit bubble, which took the Dow down 90% between September 1929 and the middle of 1932. And on top of that, you had Smoot-Hawley tariffs introduced signed into law by President Hoover in early 1930. And we've got Trump's tariff tantrum, which, additionally is creating huge uncertainty. I mean, at least the Smoot-Hawley tariffs, they were quite clear from the outset what they were going to be. This is just so uncertainty. I mean, every day you wake up, you find that Trump is saying, "Oh, we're going to tariff China 100% or something, or India 100%," and then it sort of backs off the day after. The whole thing is just so uncertain. This is going to lead into a real crisis. The point about debt is that when you have unsustainable debt, bond yields rise. I mean, I don't know where the lunatics in the investment asylum, how they think that, you know, interest rates and bond yields are going to fall. I mean, this is complete nonsense. It just doesn't work like that. There's just so much hopium in the whole situation. This is going to be extremely nasty, I think, going into early next year. And on top of that, I mean, we can now work out for ourselves, and you don't have to look terribly far to do this, where China is going with the Shanghai Cooperation Organization and BRICS and getting rid of the dollar. I mean, they are lining the yuan up to be, if you like, gold-backed on a new Bretton Woods type model. Having effectively cornered the gold market, they're now opening it up to foreigners with vaults in Hong Kong, vaults in which I understand are being built at the moment in Saudi Arabia. Why Saudi Arabia? Because that's where all the oil comes from, big trading partner, and also similar facilities throughout Southeast Asia. Yeah, this is the prelude to a gold-backed yuan, and they will introduce it basically to stop the yuan going down the Swanee along with the dollar. The dollar is toast. This is very bad news. It really is. And the consequences are that we've got a declining economy, which I think will go into a real slump, major slump, with interest rates rising at the same time, inflation, which is the misnomer, actually, really what it is collapse in the purchasing power of the dollar, soaring. This is, it's not just a question of stagflation. This is the nastiest combination, really, of an economic and fiat currency collapse. It's the end of the fiat currency era. That's really what we're staring at, Peter. So in a nutshell, there you are. That's quite enough to be going on with, I should think.
Yeah, and even on the vaults, I know they're building one in St. Petersburg as well at the moment, which will be up and running by the end of the year. You look at the BRICS economy, they're now around 40% of global GDP. You then look at even if you look away from that, you look at the UK, for example. We're in a 50 billion deficit that's just emerged that we're talking about. It's quite small numbers, but how much of an impact that's having on our own yields and whatnot. You then look at the US and you see this 3 trillion deficit per year. Sure, like you're sort of saying, that this can't carry on, can it?
No, don't get me wrong. A certain amount of debt is a good thing. It's just when it gets out of hand that and when it is unproductive, that it's very, very bad. And if you look at the US, the expansion of credit has been very much into puffing up financial assets. This is a bubble, and bubbles inevitably burst, and the fallout from that. This time, instead of having a currency actually tied to gold on a gold standard, this time it'll take the currency down with it. Because what is currency? Currency is credit, and you can see the mechanics of it. Bond yields will rise. Call it a buyer's strike. That's what we called it in the 70s when we had these conditions. And you get rising bond yields. That drives down all financial assets. You get a real crisis developing. And the Fed is now in a position where it's effectively set itself up, not just to be the lender of the last resort, but the rescuer of the whole shooting match. So you can see that a contraction in the value, if you like, of credit in the private sector is going to be more than made up by the dilution of the dollar by government authorities, including the Fed. So this is, it's the end of the fiat currency era. That's actually what we're approaching. And I don't say that lightly, and it shouldn't be taken lightly either.
Obviously, we've got the meeting tomorrow with the Fed, and everyone's expecting to see some rate cuts. Are you expecting that the longer term rates are actually just going to increase as a result of the rate cuts? And if so, does that not sort of lend the US to really focus more on short term borrowing, which again, if you then do have to increase rates because of inflation or whatnot, you're basically trapping yourself even in the short term to a pretty disastrous outcome, aren't you?
Yes, indeed. Basically, they can't really fund out along the yield curve because the auctions are disappointing. And I think that's going to get worse if they try it. So it's increasingly going to be T-bills. And this is why the Fed has been looking at reducing the supplementary leverage ratio on large banks. That will create balance sheet space for banks to buy treasuries, and they're not going to go out along the yield curve. They will buy short term. I can see the logic of trying to get some breathing space by reducing the Fed funds rate, to which, for example, 3-month and 6-month T-bill rates are effectively tied. So I wouldn't rule out a half-point cut. I don't expect a half-point cut. And I suspect also that in terms of precious metals, if you get a half-point cut, gold would probably go through the roof. Get a quarter-point cut, you might get some profit taking. So I think that's something which we can just dismiss as a short-term effect. It's not going to change anything. And what we've seen really with the dip in bond yields recently, I think, is just a pause before the move. Before the move goes far higher. I mean, you and I have been in markets long enough to know that very often the first move is in the wrong direction, and it's followed then followed by the way the underlying direction is really going. And I think we'll probably see that also in bonds. I mean, we've seen bond yields fall. And of course, this is a catastrophe for France. It's a catastrophe for the UK as well. And I think that the problem with deferring the autumn statement, budget, whatever you like to call it, until the end of November, is that it actually gives more time for a crisis to happen before the Chancellor actually stands up and delivers her statement. I really do think this is a hell of a mess. I mean, it's going to turn out to be a real mess, this one.
Yeah, I mean, even just looking at the UK, but does the ultimate outcome not just revert back to quantitative easing? Is that really? I can't really see another. If we're in this scenario where confidence in these governments to actually repay their debts is an all-time low, what else can they do other than print some more money to cover it?
Well, you're transferring confidence in the government to, or lack of confidence in the government to lack of confidence in the currency, I think. I mean, there isn't actually a way out of this. That is the problem. In the past, markets have given the authorities an awful lot of, if you like, slack in terms of being able to do things which economically are destructive. I think that's not how, I think we've come to the end of that road. I mean, one of the things that's really going to kill the dollar, I think, in 2026 is, the developments we've seen recently with BRICS. I mean, it's fascinating. Apparently, Modi in India turned down, I mean, he refused to answer the telephone 4 times to President Trump when President Trump realized that he'd made a huge great mistake trying to sanction India for taking in and processing Russian oil. I mean, this was the art of the deal. But I mean, the art of the deal really depends on your interlocutor actually talking to you. And Modi said, no, forget it. And next week, he was in Beijing, or not, but Tianjin, or whatever it was, the SCO conference, hugging and kissing with Putin and Xi. That said it all. I mean, these are the 2 most populous nations, India and China, 2.8 billion people out of a total population on the planet of about 7.5 billion. I mean, what we're looking at, I mean, you were saying that, sort of BRICS and SCO, we're looking at something like 40%. If you look at GDP in purchasing power parity terms, China is already a good 30% larger than the United States. Taking the whole thing, I mean, what we're seeing is China is tying up the majority of the world economy as its own market. It no longer cares about America. It no longer cares about Europe. I mean, we can ban them from here to hell and gone. It's not going to change anything. And the one piece in the jigsaw which is yet to really be put in place is the one which we can now see developing, and that is a yuan which doesn't share the fate of the dollar, the euro, sterling, and the yen. The yuan will go on a back. I mean, the way it's going, you can see quite clearly that they're modeling a new gold-backed currency, based on the way in which Bretton Woods worked. In other words, it won't be for individuals, if you like, to exchange yuan for gold. It'll be at the government level, and it'll be international trade related. Exactly what we had under the Bretton Woods system. This is Bretton Woods Mark II. You can see it. It's there. Now, what does that do to the dollar? It kills it, because you've got the majority of the world, both in terms of population and GDP, no longer needing the dollar. And so, you've got $40 trillion of financial assets. You have got, according to the Bank of International Settlements, a further 80 trillion tied up, if you like, as part of the foreign exchange markets. On top of that, you've got the euro-dollar market, in other words, offshore dollars, which are a further 10 trillion. So you've got what? About $130 trillion seeking a home. Where does it go? It goes back to America, doesn't it? It gets sold. It's redundant. That's going to collapse the dollar. You collapse the dollar, what do you do to us? You collapse us as well. And the Eurozone, God bless them. And also the yen. I mean, this is the challenge. Dealing with this is the challenge in 2026. And markets are blissfully unaware of it. I mean, they're still, momentum chasing Nvidia and Bitcoin and all the rest of it. I mean, it's crazy. People are asleep. Wake up.
I don't know if markets are that unaware of it. You look at what's happening with the price of gold at the moment, and I think it sort of tells you that there is concern out there. You look at the outflows of bonds and treasuries. I feel like that they're all signs that the markets are a bit uneasy about what's going on. Maybe not to the same extent as what you're saying.
Well, yeah, I think, with respect to gold, I mean, you can say it's front running the situation. Okay, I wouldn't disagree with that. But what's the participation? People aren't buying it in the West. I mean, you got something like, $300 trillion worth of portfolios. What do they own? 0.5%, probably. I mean, it's basically what's been driving gold are the central bankers who can see exactly what I've been talking about, getting the hell out of dollars, getting the hell out of euros, and getting the hell out of sterling. That's actually what's been driving it. The central bankers, the guys who really know, right at the top, if you like, they're the ones who've been getting out of fiat currencies into gold. And that's why gold is, knocking on $3,700. It's got nothing to do with the investment community. They're sitting there, as I say, like a rabbit at the road, frozen by the headlights of an oncoming car.
Hi, I'm Kelly Malcolm, founder and CEO of Borealis Mining. We're reigniting gold production in Nevada, one of the world's most attractive mining jurisdictions. Our flagship Borealis project is 100% owned and fully equipped for production today, with power, water, workforce, permits, and even a modern ADR facility already in place. We've started crushing high-grade stockpiles, and our first gold pour is just around the corner. Historically, Borealis produced over 600,000 ounces of gold, yet much of our 21 square mile land package remains unexplored. With nearly 2 million ounces of historical resources and past drill results up to 67 meters at 16 grams per ton, the upside here is tremendous. But Borealis is just the beginning. Through acquisitions like our nearby Sandman project, with a strong PEA showing 35,000 to 40,000 ounces per annum and $121 million NPV at $1,800 gold, we're building a hub and spoke model designed to deliver scale and efficiency. Our vision is bold, to grow into a greater than 100,000 ounce per year Nevada powerhouse within the next 5 years. With a proven team, strong shareholder support, including mining legends Rob McEwen and Eric Sprott as major backers, and multiple catalysts ahead, we're positioned for both near-term cash flow and long-term growth. Follow our journey at borealismining.com or connect with us at info@borealismining.com.
Yeah. What about when you talk about a gold back one and moving forward, one of the main criticisms or one of the main concerns, I guess, one of the main reasons why people didn't think that was ever going to happen was because of the lack of trust between the BRIC nations. I think it'd be quite hard to say that they genuinely trust, if they give each other gold, that they'll ever see it again. Look at Russia with Italy during the Second World War. They never saw that gold ever again, right? Is that still an issue, do you think, in terms of something that would end up delaying any BRIC-based gold-backed currency?
Well, no. I mean, I think our problem is that we believe our own government's propaganda. I mean, we've been told that Ukraine is winning the war. They're coming down a little bit off that perch, understanding that actually it's losing the war, but we can't quite say that. It's those beastly Russians, and so we're vilifying the Russians and Putin and all the rest of it. Who, quite frankly, if you talk to people really in the know, not pushing the propaganda, I mean, it's quite clear that what Putin is doing is protecting his borders. It's us who've been marching NATO eastwards, threatening Russia. So, I mean, that's one area of propaganda. The other area of propaganda is anti-Chinese. We hate the way they treated the Uyghurs, and they were,
even on top of that, it's not just the Uyghur. I mean, you look at their mining, like for example, say we're in mining. You look at their operations in Africa and the way that they treat the local population. I don't think it's unfair to say that having a dominant China would be quite a scary aspect. The way that they've treated other nations.
I tell you what, is it more scary than having a dominant America who will lend you dollars and then raise the rates on you and dump you, or force regime change on you? Is it worse than that? What the Chinese do is they go in and they set up joint ventures. They will help develop infrastructure. In other words, they don't try and bribe the politicians by sort of giving them dollars under the heading of aid. I mean, we know what happens with aid pounds and dollars.
I would say that they don't do it under the heading of aid. They just do it. You look at mines in Africa that have changed hands. You've got to wonder. I don't think these politicians in Africa are removing Western licenses and giving them to China for the fun of it. I feel like there must be more underneath the surface.
Well, I mean, the fact is, the way the world is going, it's going China's way.
It is.
I would not claim that the Chinese are popular with local Africans. They never have been. But their approach actually has accommodated that. I don't mean accommodating it by, suddenly making them terribly popular with tribal Africans, but they do understand this. And the point is that the investment that they do in African countries is productive. That is the key point. What we've done is we've just basically chucked money at the politicians on the basis you stay on our side, otherwise the money stops flowing, or we'll arrange regime change, whatever. I mean, we're not talking, they're not nice people, the Chinese government. Don't get us wrong on that one. No government is nice. But, the fact of the matter is that they now dominate the world, along with Russia. They have got control over the world. America, particularly under Trump, has lost its hegemony completely. Trump has destroyed it, with his MAGA. I mean, what does that mean? It means he's been autarkic. He's sort of coming in. America's coming in on itself and cutting off its trade relations with everybody else because it wants to start making its own stuff. I mean, that's actually the reality of it. The Trump administration has actually hastened the decline of America. And the interesting thing is that it would appear that the deep state in America is now focusing on controlling the Americas rather than the rest of the world. That I find is an interesting development. It seems to me that that's a recognition in the deep state that they've lost this one.
Yeah, we were actually talking on the show not too long ago about the conflict in Venezuela and the president over there having 4.5 million people, military behind him. It's sort of, you've just seen as well that they've just changed the status of Colombia on the war on drugs as well, with they're starting to bomb ships outside of Venezuela. Yeah, it does. I think you're right there, actually. It does seem like there is a bit more of a focus on getting their backyard in.
Yeah, and the big prize will be Brazil. The B in BRICS. I think that the Americans will want to prize that one out of the Chinese sphere of influence.
In terms of how the next 12 months look like, how are you positioning yourself in terms of what's coming?
I tell everybody, get the hell out of credit. And what that means is that you've got to get into real money, legal money, without counterparty risk, final settlement, and that's gold. And, silver also has that traditional role, though at the moment it's priced as an industrial metal rather than as a monetary one.
What does the future of Europe look like? We seem more divided than ever. You look at fires in the middle of roads in France at the moment. You look at crime rates around Europe. You look at the economic hardship going on. What happens when, if you're right, you do see this decline of the dollar? What happens to Europe after that?
Well, I think things happen in phases. The first thing we're seeing is a decline of the dollar. And that will have the knock-on effect on all the fiat currencies, because really what we're looking at is the end of the fiat currency system. I think, excuse me. I think that Europe is in great risk of falling apart. The Brussels administration is a joke, and it hasn't really got control over anything. Not democratic control. So long as Brussels exists, it is divisive, I think, between nations rather than cohesive, which it's meant to be. You can already see that there are some factions which look more likely to survive than others. And I would say that Italy, under Meloni's really, that is a recovering well. And she's also got the common sense to realize that you've got to have people with wealth around you rather than chasing them away. You get the head of Goldman Sachs Europe moving to Milan, for goodness sake. That was a huge signal, I think. And also Hungary, and some of the Balkans, etc. So I think there's, there is a sort of, if you like, a left-right, a sort of welfare state is history part, and welfare state, we're going to continue on down that road because we're communists after all, like France, Spain now. Germany is difficult. Germany is a mess, a huge, great mess. You've got the politics of anti-Russian politics and all the rest of it. And I think that's probably going to go to an extent, but I think Europe's sort of dividing into those sort of two camps, and I think it'll just break apart the whole thing. The euro itself is, it's like a camel, put together by a committee. It won't survive. Of that, I'm absolutely sure.
Personally, I don't think there's going to be an EU or a euro in 5 years' time.
I don't disagree with that at all. Yeah, I might even come in a bit and say maybe 3 years. I don't know.
Well, obviously UK have already left. You've got the National Front in France, which are looking like the clear winners in the next election. They'll be leaving the EU. You look at the AfD in Germany, they'll be leaving the EU. Without these 3 core member states, I don't think it survives, personally.
Well, yeah, but on its own, what would happen is that they would restructure it, if you like, to try and keep the thing going together. But I think the thing that will kill it is currency. The currency is, it's a fiat currency. Okay, we know that the central banks, France, Germany, Italy, are 3 of the biggest holders of gold in central banks. But they haven't got the situation where they could go back onto a gold standard, because their deficits, their budget deficits, are absolutely enormous. They're out of control, and there is no political will to control them.
But also on a gold standard, you just wouldn't be able to have the welfare state that we have at the moment. It just wouldn't be possible. And I don't think there is an appetite within most of the ruling elites at the moment that are currently in government. You see a lot of sort of more socialist or left governments currently in Europe. None of these governments are ever going to want to reduce the amount of welfare. So I just can't see it.
No, you're right. I mean, I think we have to be quite clear. I think there are people in government who do see these dangers, the dangers that we're discussing now, but they do not have the authority to deal with it. And not only do they not have the authority, I mean, they've just got to get. I mean, Starmer is in this position. It's a very, very good example, if you like, of just how entrenched politics has become in our future. The left wing, he's got to lift. He feels he's got to listen to the left wing, otherwise he's out. And guess what? We had the welfare stuff chucked out of Parliament, a couple of months ago. So what did he do? He just sort of backed off. Why? Because the Parliamentary Labour Party is there for one reason, and that is to increase welfare, not reduce it. So that was the first thing. Now his authority is being challenged openly, and you've got Andy Burnham on the left setting himself up as Starmer's replacement. Now, what our government is going to do, our dear government is going to do, is it's going to go even further left than it is at the moment as the solution to our problems.
I just wonder, obviously, like you're saying there, they've delayed the budget until the end of November. They're already, the longer they wait, the less confidence there is, the higher the interest repayments are, the more of a deficit that we're going to see. I don't understand how they can afford to keep, other than trying to tax more, which isn't working. They just tried that last year, and we see less money coming in. We're at the tip of the Laffer curve here. I don't really see how that's going to work.
Well, it can't, is the short answer. And, as far as the politicians are concerned, the solution is to go even further left. So where does it end? It ends in a crisis. It's absolutely clear. And because you've got an international fiat currency crisis, that's the background against behind our own crisis. It's tragic.
There's rumours that the IMF wouldn't be able to. They're not big enough. They're not powerful enough to bail out a UK or a France. What would that look like if, say, for example, UK or France would need to be bailed out and the IMF can't cover the costs?
Well, the IMF bailout actually isn't something that is on the cards. The IMF comes to bail you out when your currency starts collapsing, basically. It was slightly different with Greece. Greece was so much. It was an absolute mess. It was threatening to blow apart the euro system. So, in that case, the IMF were called in. The IMF were called in back in '76, basically because sterling was in a crisis, and the only way to resolve that crisis was for the IMF to force the government of the day to balance its budget, to cut its spending and raise taxes. And that's what happened. I don't see that this is quite the same situation today. We can get a run on sterling. We get a run on sterling, then, okay, we might start talking about it again. But I think that's the presupposition that you've got to have the run on sterling. But of course, in the case of France, you're looking at the euro as a whole. If it threatens to blow apart the euro, then the IMF may well come in conjunction with the ECB.
Okay, and say for example, because obviously a lot of these states are already very high tax. Obviously, cutting the welfare is one thing, but raising tax in itself, I think you'll just see more and more businesses close down, more and more people leave the country. Does it? I don't know. Has this got any parallels to '76, even with France? So are we not in a position where some of these solutions possibly won't be the answers?
Well, the parallel which everybody's been drawing, as far as we're concerned, is with 1976, when Healy was ironically going to a meeting of the IMF. It was the annual meeting of the IMF in Washington, and he was sitting there with a gin and tonic, and then told, "Oi, you got, cancel that. We got trouble at home." So he cancelled that and came. And then you had this sort of charade, really. The IMF team came along and they booked themselves into Brown's Hotel under pseudonyms. But then they were rumbled by the press. So, I mean, the thing was all a bit of a joke. But I mean, they forced the government of the day to actually, sort of cut spending, do things. But the other thing, actually, which is worth noting, is that we got lucky because North Sea oil came on then. That was when Forties Field and Brent and all the rest of it suddenly, we were a petrocurrency all of a sudden, and that really helped. What are we doing now with North Sea? Do I hear drying up? Do I hear closing down? Do I hear taxing out of existence? This lot, I tell you, this lot are more destructive, I think, even than the time 76. I lived through 76, and I remember how bad it was. I mean, this is shaping up to be even worse. It really is.
Well, I think that's sort of where my concern is that it seems like it is worse than that. And I was in Aberdeen, obviously the heart of the UK's oil industry this time last year, and it was actually quite concerning just to see how quiet and how quiet it was, and also just to see all the house pricing collapsing in Aberdeen. There's really no buzz there anymore, and it's this what sort of shows what's happened to our oil industry in the UK.
Sure.
So I'm just looking over some of the other things that we were talking about. So say, for example, the Fed do decide to do 0.25, 0.5 basis points tomorrow. What long-term implications could that have?
I don't know that there's long-term implications on that, really. I mean, really, what the Fed does is not that relevant, I think, in the outcome for next year. I mean, the thing that which I think is absolutely crazy is nobody expects interest rates to have to rise. Now, I'm not saying that they will rise, but what I'm saying is that they should rise. They should be rising now, but they're not rising. The political demand is for them to fall, and that's what the Fed is doing. I can understand it from a sort of short-term finance point of view that if all your funding is being done in the T-bill market, then obviously you want lower rates, and you don't care what happens at the long end. Well, you do care, but it's not really relevant. So there's a bit of that, but this is just stupid. I mean, why don't people understand it? They don't seem to. Well, I think the answer is they don't understand money and credit. Actually, they don't understand that. The Fed actually has fairly limited control over things. They think the Fed has total control over everything. Big mistake, and they'll find that out the hard way, because when bond yields rise into the year end and they go, you see the long bond and the 10-year go through 5%, then, this is going to collapse the equity bubble. We're already, if you look at the relative valuation between equities and bonds in America, it's already twice as extreme in terms of equities high relative to where they should be compared with bonds. It's record high. It's more than twice as extreme as it was at the time of the dot-com bubble. This is a recipe for a complete collapse of financial asset values, and that'll happen.
A lot of people have their wealth in the housing market. What then happens to that market, do you think?
Well, the housing market is also in the firing line because the price of housing is determined by the availability of mortgages, and if mortgage rates go up, then house prices will come down. And forget about how this is a solid asset and it always retains its value even when it's an inflation hedge and all the rest of it. It's not going to be, I'm afraid. No. might hedge it a little bit. I mean, if you look at what happened in Germany in 1923, property prices measured in gold collapsed completely. You could buy a house for $100 in Berlin, big house.
Blimey. Is there a risk that we're going to see similar to what we have seen in the past, where mortgage rates go up to an extent where people can't repay their mortgage? You start seeing sort of foreclosures and auctioning of properties on a mass scale around the UK, for example.
Well, you're going to see an awful lot of negative equity, and I would guess that government will step in and instruct or somehow subsidize mortgage companies to stop them raising rates as much as they would otherwise. But I mean, it'll be like urinating into the wind. I mean, it just go absolutely nowhere.
Where's the money going to come from to subsidize? If we're at this point where we're talking about a collapse because of a 50 billion deficit, and we're not able to cut welfare, and we're looking to tax more, which I'm not sure is actually going to be the answer. All of these ideas of how we could solve things in the future, I don't understand where the money comes from.
Well, the answer is out of thin air. It's as simple as that. I mean, you can create credit as a central bank. You can create it like that. So yeah, I mean that's not a problem. But the consequence is that you undermine the value of your currency. And I see not only the currency suffering from that, but bear in mind that the value of a fiat currency depends on the faith its users have in it. That faith disintegrates. You could forget about the relationship between, the monetary theory relationship, sort of increase in quantity will devalue the currency and stuff. Yeah, that happens. But on top of that, I think the loss of faith, which is really what we're on the edge of, is going to have a considerably greater effect.
Obviously, you're talking about sort of the fiat collapse. Does it collapse though, or do we just see continued sort of devaluing? But at the same time, if a lot of people have assets in things like the stock market or in gold or in other things, you'll see that value sort of translate as well, sort of going up at the same time. So is it almost as if, well, if you're, other than wage inflation, which doesn't really seem to go up much along with normal inflation, if you've got your money in assets and there is a devaluing of the currency, you're sort of okay because the value of those assets are going up along with the deflated currency.
Well, the problem is the rate at which the currency depreciates or falls, and that is accelerating. And so, really, I mean, the way you've got to look at it is not so much, how many pounds your house is worth, but what's its value in real money, which is still gold. Going down. I mean, we see the gold price going up, but actually what's happening is that the currencies are going down. I mean, obviously there is a bit of rise in gold. I mean, because of it's become a restricted market. The Chinese have cornered the gold market, and that means there's less of it for the rest of the world. And on that basis, obviously, gold has a scarcity value of its own. But basically, what the central banks have been doing is they've been selling fiat currencies. So what do you buy when you sell fiat currencies? Well, the answer is gold. So, but the emphasis that must be understood is that it's the currencies which are going down. They're running out of time. I mean, this is the end of the fiat currency era, the end of the post-Bretton Woods era. And so how governments deal with this then becomes the question. We now know what the Chinese are going to do because they've telegraphed it to us. That's fine for anybody who cares to listen. We know what's happening there. But what are our governments going to do? I mean, what does Trump do? He wants a lower dollar, for goodness sake. He's a spendthrift. Let's face it. I mean, you'll have economists saying, well, the way out of this basically is to cut taxes and stimulate the economy. Make the deficits even bigger.
If you were an advisor to, say, the UK government or the US administration, what would you be advising them is the next course of action?
I think the best thing I'd do is resign because they haven't got the mandate to do it. No, I mean, that is seriously the problem, Peter. I mean, there are people in government who do know what they need to do, but don't have the mandate to do it. And let's go back and look at the British situation. I mean, here's Keir Starmer now realizing he's got a real problem, having not been able to, do a relatively minor cut in welfare payments. He's now being potentially overthrown, not by sensible people, but by people even further to the left. And what can he do? He's actually stuck. And that is, I think it's a pretty good description of the political position in all fiat currencies. This is determined not by economics, not by economic sense, but by political nonsense. And until a politician gets a mandate to deal with these problems, they're not going to be able to do it. It's as simple as that. So this is why I've always maintained you get the crisis first, which focuses minds. Then you can start talking about a solution.
Say, for example, you had a magic wand, or you had a mandate to change whatever you wanted to change. What would be, I guess, what would be the first things that need to be altered and directed in a different way?
Well, cut public spending hugely. I mean, it's everything government touches, they screw up. So basically, you don't want government. There are basic functions for government. One is to produce the laws within which we operate, and the other is to defend the realm. Beyond that, everything is questionable. I mean, they've gone completely the wrong way with education. They're killing private sector education with VAT, and providing undoing the reforms, the education reforms of under Gove and one or two other quite sensible previous education secretaries. You've got they talk about renationalizing the railways. Come on, I don't know, those of us who are old enough and suffered under British Rail, I mean, we should. Have we forgotten? Have we really forgotten how bad it was? For goodness sake, unions in charge of everything and so on. New union legislation. No, I mean, all that's got to be cut. I think also, I mean, I wonder whether you need a Ministry of Education at all, because education is basically handled on a local basis. You could cut the whole thing out. Also, Department of Environment, get rid of that. I mean, there is a lot of chainsawing you can do, if you like.
That's essentially, we need a Malay government to come into the UK and cut it off.
Yeah. But there's no way. I mean, honestly, there's no way you get a mandate. The other thing there are various things I would do. For example, I would hypothecate revenue. I think that's desperately important, because at the moment, what happens is that everything goes into a Treasury General account, which gives the Chancellor the ability to spend, let's say, road fund licenses on welfare benefits and so on. In other words, what I would want to see is a government accountability. If you're going to tax things to do with roads, then spend the proceeds on roads. So, that none of this obfuscation occurs at all. I mean, I would also, are there 14,000 quangos? Shut the lot down. We don't need them, really. I mean, there is a lot we can do actually to get government below 25% of the economy and below 20% of the economy.
Yeah, I actually really like the idea of tax allocation based on where the revenues sort of derive from and where it's meant to be spent. I think that would be quite a good idea. Yeah. Okay. Nice. Okay. So, looking forward this time next year, where do you think we're going to be?
Well, I think we'll be in. I mean, what the press will refer to as hyperinflation. We're going that way. Not just because of our situation, but because of the dollar. Bear in mind that when China actually gets its monetary situation sorted out, which it is doing at the moment, the yuan will replace the dollar. for 70% of the world's population and the majority of the world's GDP on a PPP basis. That means that there will be surplus dollars having no use at all. They will be sold into the market. They will go. That will collapse the dollar. And at the same time as this is happening, you've got bond yields rising in America. I mean, it's going to be, the situation is going to become unfundable, if you like. So the collapse in the purchasing power of the dollar is likely to be far more severe than anybody can think of. And on that basis, you just got to get the hell out of credit, because the whole fiat currency system is based on the dollar. And the dollar is credit, it's not money. And you have, the problem, I think, in America is compounded by the fact that very few people within the administration actually understand what is going on. They are beholden to Keynesian economics, so there's got to be a huge re-education process there. I just don't see that they can deal with this. I mean, surely there comes a point where things are so bad that the political class feel that they've got the mandate to actually, say, stop. We've got to stop this. Yeah. But the political class is too weak to do it. It really is. And I can't see where the strength is going to come from in order to tackle this. I really don't. So it could be that the dollar becomes, for all intents and purposes, pretty much valueless. The end of the fiat dollar.
That was part of the reason why Elon left Doge, right? He sort of realized that it couldn't happen.
Yeah. Yeah. Well, I think what he realized was precisely what we've been talking about. Without a political mandate, you can't do it. And, when it came to Doge, I mean, you had the whole system, if you like, angled at stopping him doing it.
Yeah. Well, also, I think the big thing as well is working so hard to try and cut government waste, and then you see new bills be brought forward to increase the size of government and increase the spend. It's just
absolutely, yeah. No, I agree. And attempts to cut government waste actually are themselves a waste of time. You just got to cut government, full stop.
Yeah. Last question? Obviously you're sort of saying end of fiat, end of credit. Sort of you need to position yourself in hard assets. People look at the price of gold today at $3,700 and say it's too expensive. What mindset do you have on the price?
Well, it's not gold going up; it's credit going down. And if you believe that credit is continuing to go down, don't look at the gold price. Just get the hell out of credit. It's as simple as that.
Brilliant. Alasdair, I mentioned at the beginning, obviously your Substack. I just wondered, where can people find you, and what else do you talk about? What should people be looking for when and what can they expect if they follow your work?
Well, my Substack is macleodfinance.com. That'll take you to it. And I write on geopolitics. I write on economics. I try and stay out of party politics. I'll write economics in the, if you like, in the classic sense rather than the Keynesian sense. Macroeconomics is non-science. It really is. So I try and sort of, bring some rationale into it. I try and explain the difference between money and credit. I try and be, not beholden to propaganda at all, which is desperately important. I mean, I think it's a joke that the BBC appoints someone to unwind conspiracy theory when the greatest conspiracy theory is government itself. But anyway, that's so it's really, I tell you, my mission basically is to help people escape what inevitably now is beginning to happen, and to understand how to escape from it, how to protect themselves, and to stop thinking in terms of accumulating wealth. No, you've got to preserve what you've got, not accumulate. That time is gone.
Well, look, a lot of these topics you've been talking about and screaming from the rooftops for years now, and I think most people can finally see them unfold. So, Yeah, I appreciate you sharing your ideas with us, Alasdair.
That's my pleasure.